Why would I do that now? And it's like, oh, it's just, I mean, yeah.
Okay, it's 9:30. Everybody's not here, so we need to start. Let's see, 7 of you are here, and there's still a few that may come in late. Uh, Now, Holly Davis, she had emailed me yesterday and said she couldn't get into Cengate. She sent me a screenshot of Cengate. Everything was closed. And that was my bad. I had to go in and set the dates. I didn't put a beginner, January 13th, or ending date. I guess it's May the 6th. And then it opened them up. So your assignment should be good to go. And I guess you're getting in on the right Moodle. See, they gave us 3 Moodle sales for each class. And one of them was blank. I omitted it. And 2 of them had all the sales filled in. I just looked at the one that had you all in it, and I deleted the other one. So I guess we're on the right trail, I guess. Everybody has a book. Everybody's gotten started back. And you're not going to get any snow days this year, so grin and bear it, and let's get into accounting. Okay, chapter 11, let's look at some liabilities, and especially payroll. But current liabilities, you know what those are: accounts payable, taxes payable, uh, anything with a payable. There are long-term liabilities, which might be a long-term note. But here's liabilities for payroll. That's what we want to get into. Now, most of you are working part-time. See, Carl Cooper made it. Carl, you didn't come by yesterday. We were supposed to look at your grades yesterday, weren't we? Forgot, didn't you? Well, you'll find me. We'll look at it. We could change it all the way up to May the 6th. All right, when a company or bank advances credit, it's making a loan. It'd be a short-term loan. The company or bank is called a creditor lender, and you would be the borrower. Debt is reported as a liability, and we mentioned long-term liabilities over a year. Current liabilities has to be paid in less than a year. For most companies, accounts payable is the largest current liability. Long-term liabilities is called installment. Your car payments is probably an installment loan. Your mortgage payments, if you have a house, that's pretty much installment payments. Now, we know how to calculate interest, I hope, but to get a notes payable on your books, if you can't pay your accounts payable, you go in and give the company a note. And now, Brooke, I don't know what we were talking about. We were supposed to be able to write somewhere. Uh, wasn't this one, I don't think. But anyway, we're swapping accounts payable for notes payable. Now, we also could borrow money from a bank, and it would be debit cash and credit notes payable. We also could buy heavy equipment or an asset and debit equipment and credit notes payable. So there's three ways to get a notes payable on your books. Now, on this note, all right, it's $1,000, 12% interest for 90 days. That's 90 over 360. That's all that is, and really that reduces down to 1/4. So it's 1,000 times 12% times 1/4, or times 90 over 360. Now, when you pay off that note, you debit notes payable, you debit the interest expense, and you credit cash. Here's the borrower, here's the creditor. You buy merchandise inventory, your credit account's payable. You can't pay for it in 30 days, your debit notes payable, accounts payable, credit notes payable, then you pay it off. Now the creditor, he would have accounts receivable and sales and cost of merchandise sold and credit inventory. We went over those entries. Here he's going to debit notes receivable and credit accounts receivable. Just reverses. Here he's going to debit cash, credit interest revenue, and credit notes receivable. Just reverses. You borrow money from a bank based on a note, as I said. All right, calculate the interest on this note real quick. Make sure you can calculate the interest. So Tony Hood's not here. Marcus is still not here. Robert is still not here, or Jay. All right, what is the interest on that note, folks? How much? 150. And nobody should have any trouble, I hope, finding $150 interest on that note. It's just 4,000 times 15% times 90 over 360, which is 1/4. Okay, so RJ made it. Last semester, ladies, I had about 18 in this class. I think 16 of them were males, 2 females. One female had to draw, and then one posted hers online. So it left me with about 15 males in here. And I'm glad we got some females. I like a mixed class. All right. Now, fellas, I'll tell you why I like females. Don't think the wrong thing there. They're the first to show up this morning. All 4 were here, probably 5 minutes earlier or so. They'll be the first to have their homework. Okay? They'll be the first to participate in class. So let them set an example, fellas, and make those statements false this semester. You'll be the first. All right?
I have a question.
Yeah.
On the equipment, did you say debit equipment or debit equipment expense?
On your debit equipment
Okay.
and
That's
your
where
credit
notes payable.
notes payable.
Okay, alright, that's
All
what I
right.
wrote down.
Now, how do you get equipment as an expense? You appreciate it.
Right.
That's how you finally take equipment as an expense. All right, so on this one, you debit notes payable, you debit interest expense for the 150, and you credit the total cash. Now, there are discounted notes. What that is, on the due date of the note, this company owes First Bank $4,000 plus interest of $150. The interest recorded the payment of the note is and it's just simply here. But if it's a dishonored note, assumed on August the 10th, this company issues a 20,000 90-day discounted note to Western National Bank. The discounted note is 15%. Now, discounted means they take the interest out in advance. So here, you get cash of $19,250 from the bank, but you owe them $20,000. They're taking the interest out up front. Now that makes your true APR higher. So if you ever borrow money, borrowing on an interest-bearing note, it's the true APR. This APR is probably up somewhere around 16%. So don't borrow money this way where they take interest out up front. Then when you pay it off, you don't have to worry about interest expense though. You debit the note and credit cash. That's just another example. Now we're going to get into payroll. Now, I'm going to ask you a question. Would you rather have $2,000 semi-monthly or bi-weekly? If you were paid $2,000, would you rather have that $2,000 semi-monthly or bi-weekly? Why do you say bi-weekly, Amy?
Because sometimes there's more weeks in a month and you may end up with 3 paydays instead of just 2.
Bi-monthly is 24 paydays. Times 2,000 would be 48,000, wouldn't it? But bi-weekly would be 26 paydays times 2. That'd be $52,000. So you definitely, every 2 weeks is bi-weekly. Twice a month is semi-monthly. There are 4 weeks in every month. All right? 4 weeks in every month. But a lot of months have 31 days. That's 3 more days besides 4 weeks. What does February have in it this year?
29.
Which is leap year, right? Was anybody born on February 29th? It's your birthday 4 years later. All right. Anyhow, now we're going to calculate some payroll. Now in payroll, we get time and a half, don't we? Now, any of you that in here that work, does anybody get overtime? Do you get overtime? If you work, do you get overtime? All right, overtime is usually what? Now I'm going to have you do a few calculations. And I'm going to lead up to the last calculation, which probably all of you will miss. Maybe one of you will get it correct. But we'll see. Hopefully all of you will. Now, if you are paid $12 an hour and you work 50 hours, you get time and 1/2 for all over 40. Calculate the wages for that week. You work 50 hours. Calculate the wages for 50 hours, $12 an hour, and you get time and 1/2 for all over 40. All right, you can multiply 12 by 50 if you want, and then multiply 10 by $6 if you want. But the best way is just take your 40 hours times $12, and that's how much?
480.
480. All right. And then you take the $12 times 1/2 makes it 18 times what?
10.
All right, that makes it how much?
180.
So your wages for that week is 6,600, 660. Okay, everybody follow that? All right. Uh, okay, you make $800 a week for a 40-hour week. Tell me what your overtime rate is. Just tell me what the overtime rate is. How much? What is your overtime rate? You make $800 for 40 hours. How much is that per hour? How much? All right, if you divide by 40, you get $20 an hour. My question was, what is the overtime rate? How much? $30. 1.5, 1.5, whatever you want to do. The overtime rate would be $30 an hour. Now, some places may pay you double on your birthday, or they may pay double on Sunday. And there's a few companies and few government units, whereas 32 hours a week is full time, and you get overtime for beyond 32. I think the garbage collectors union in New York City, 32 hours a week is a full week, and you get overtime beyond 32. So 40 is the Fair Labor Standard Act norm. Okay, now you pay a salary. You get paid a salary. You signed a contract to work 40 hours a week for 52 weeks. And you're going to get paid $60,000 a year. Now tell me what your overtime rate would be if you worked more than 40 hours a week. What would be your overtime rate? I hope you're participating with us on your calculators or pencil and paper. It may come out to a fraction. If it does, carry it out to 3 decimal places. Anybody got an answer yet? Fraser, what you got?
I don't think I did it right. What's the 52 for?
That's 52 weeks in a year. You're going to work 52 weeks for 60,000.
Or you want the hour? What you get per hour or overtime?
I want how much you get per hour, then multiply that by 1.5 and get the overtime rate.
Per hour is it 28?
$28?
Yeah, 28.80.
$28.80?
No, just 28. Sorry.
And then you multiply that times 1.5 and got what?
43.
Now, who else got that? Who else got 28? All right, divide 60,000 by 52 weeks and see what your weekly salary is. If you divide that by 52 weeks, what is your weekly salary?
1,153.
How much?
1,153.
1,153. Now you work 40 hours, so divide that by 40.
28.
Does that give you 28? Even?
28.8.
Well, you gotta take the 0.8. I don't wanna be cheated out of 80 cents an hour. Now multiply that by 1.5.
$43.20.
43.20. All right. I have given you weekly wages, and you found the overtime rate. I have given you annual wages, and you found the overtime rate, 43.20. So now, one last calculation, and this is the one, if you're not careful, you're going to miss it. I want the overtime rate if your monthly salary is $4,000. Your monthly salary is $4,000. I want your overtime rate. Amy, you seem to have it.
I think, I'm not sure.
What do you have, Amy?
$37.50.
Well, let's give everybody else time and see if they get the same thing. Amy, did you divide 4,000? Did you divide 4,000 by 4? All right, Amy divided 4,000 by 4 and got 1,000. And then she divided that by 40 and got what?
25.
And she multiplied 25 times.
1.5.
And that was equal to 37.50. Anybody else get that? If you did, you are as wrong as Amy.
Oh, no.
Amy is 100% totally wrong on the test. If that was her answer, I wouldn't even give her credit for her work. I'd give her a 0. Okay.
Hey, it worked.
All right, but Amy had an answer. Some of you didn't have an answer. All right. Amy, you're assuming there's 4 weeks in every month, which is not true.
No, some weeks have 5.
What?
Some months have 5 weeks.
No, no month has 5 weeks. Some months have 3 extra days, or 2 extra days, or 1
Oh,
extra.
well, yeah, but it gives you.
All right, Amy, here's what you got to do. So let's start over. If you get 4,000 a month, I would multiply that by 12. How much would I get per year?
48,000.
All right, now we're back to the second problem you worked.
All right, I got it.
If I get 48,000 a year, I divide that by 52 weeks. So how much do I get a week? Not 1,000.
923.
900 what?
23.
If you were my payroll accountant, you overpaid people by $77, and I'd fire you. See, you may have to calculate salaries based on different contracts. If it's per hour, it's okay. But if they get paid per month or per year, you got to calculate their overtime rate. All right, so 923 divided by 40 is a different story. How much is that?
2340.
How much?
2340.
And multiply that by 1.5.
3461.
How much difference? $3? About $3 difference, or $2.90 or $2.89 or something. All right. You got to convert monthly salary sometimes overtime. They get paid every week and they work overtime. You got to be able to pay them overtime, correct rate, or an annual salary. Now up here, we're paid on annual salary. Our contract states that. We don't get overtime up here though. Okay? Um, Now, if a faculty member teaches an extra course, he gets an overload pay, but not overtime. And the college has a formula, so much per student up to maybe $1,800 per course, same as they do for a part-time faculty member. Uh, but teaching overload up here is really not worth the effort. But a couple of faculty members like overload, like Malamazur, he likes an overload if he can get it. Okay? He's got a new dog at home he has to support, and he needs more money for his dog. Okay, now you're experts on calculating payroll. So let's see where payroll is going here. We're going to calculate some taxes in a minute. Wages, salary. Sometimes there's bonuses, sometimes there's commissions, sometimes there's profit sharing, and sometimes there's cost of living adjustments. All right? Companies engaged in interstate commerce, they have to go by the Fair Labor Standard Act, and they have to pay overtime for over 40 hours. All right? It's sometimes called the Federal Wage and Hour Law, and it says for the 1.5 time over 40 hours. Now, the minimum wage federal is it $7.35? Is that the federal minimum wage?
I think it's 7.25.
All right. Have you got your cell phone? Google it real quick and see. All right. What is the West Virginia minimum wage? How about West Virginia?
8.25.
Are you sure about that, Amy?
Here's 725.
How much?
725 is federal.
All right. Federal is 25. Amy was correct. All right. Now, is the state of West Virginia
8.75. I'm sorry.
Wow. That's $1.50 more. Now, if you work in West Virginia, which one does West Virginia have to go by?
875.
The bigger one. You always go by the bigger one. Some state has a $6 minimum wage, you go by $7.25. Now, if you were making $7.25, multiply that times 40 hours a week. $7.25 times 40 hours a week. Multiply that by 52 weeks. $15,080. Now, if you work for minimum wage and you pay gas, and you have your state taxes deducted, or with no federal taxes, you have your Social Security tax deducted, you live on $15,000 a year minimum wage. Husband and wife both working, you still couldn't afford health insurance, could you? So, I hope minimum wage is not your goal in life. Okay? Now 875. That's multiply that times 40 hours a week and then times 52 weeks.
18,200.
All right. Now, can a single person, West Virginia, make it on 18,200? You gotta pay rent, you gotta have an automobile, you gotta have transportation. Some of your old books, introduction to business books, or even maybe a market book, the basic necessities of life, most books are described as what? What are your basic necessities in life? Most books gave 3. Food, food what? Clothing and shelter. Okay, food, clothing, shelter. But I would add on transportation to that. I think transportation is a basic necessity, along with the other 3, food, clothing, shelter. All right, so I hope 875 is not your main goal in life. Now, if you're working at McDonald's in the DC area, you might get $15 an hour. But it's high, expensive to live in DC, isn't it? Expensive to live in DC. I've got a nephew, and he didn't go to college, but he lucked out and got a job with the railroad. And he's probably about 30 now, but he's had promotion over promotion. He's had to move a lot. His latest move, they're moving him from Danville, Kentucky, up to Frankfort, Indiana. He's going to be assistant superintendent over that section of the railroad from Detroit down to Chicago. And they're good to him. They give him $10,000 just to live on until he moves, besides his salary. They give him $2,000 just to doctor up the shrubbery at his house before they sell it. And if he can't sell it for what he wants, the appraised value, they buy it. They'll pay up to $50,000 to a moving company to move him from Kentucky to Indiana. So I don't know exactly what his salary is, but I'm sure it's already been over 150, and he's just about 30 years old. So you can make it in some cases. He got lucky with a high school diploma. And one thing he did that a lot of other people are just saying, the company gave them a book and told him to read it. He read it. Then they gave him a test. And he scored the highest on the test. And that's why he got this last promotion. Other employees that were even over him didn't score very high on the test. The average grade was 60-something. He made it 97 because he read that book. Okay. Anyhow, not many cases with a high school diploma can you do that. Okay, here's just calculating 42 hours. This person makes $34 an hour, time and a half for 2 hours. They made $1,462. Now we got to learn to take taxes out of that $1,462. And here are a few of the taxes. Federal income tax, that's a different rate for different people. Minimum wage, you probably don't have to pay any federal tax. State tax, everybody in West Virginia has to pay it. Medicare tax and Social Security, everybody has to pay it. Everybody don't have to pay pension contributions. Local income tax, the city of Bluefield does not have a city income tax. The county of Mercer does not have a Mercer County income tax. You pay personal property taxes and real estate taxes. If you buy a car, what's the taxes? If you bought a car in West Virginia, what taxes do you have to pay? I want to think 6%, but I'm not sure. Does anybody know? When you go get your car tags and so forth, what is the sales tax in West Virginia? 6 or 7%? 5 something in Virginia. It's almost 10 in Tennessee. So Alicia's going to Google it and tell you what the sales tax in West Virginia is.
6%.
6%. Try Virginia also, Lisa. Maybe about 5.5.
It's between 5.3 and 7%.
5.3 and what?
7.
The 7 might be on motels and hotel nights, but 5.3 is normal then on clothing and so on. All right, so we got taxes we got to take out of your paycheck. Federal income tax, you get this. Now you fill out a W-4 when you go to work, don't you? And you get a W-2 when you file your taxes, don't you? Now, how many of you will get a W-2 this year? About half of you? That's a W-4. That just claims you as a dependent, or if you're married, your spouse, but they're working, don't claim her. You get, all right, a single employee may claim one withholding allowance. A married employee can claim two, but if that spouse is working, don't do that. But if you got a dependent, you can claim a withholding allowance. So everybody's federal tax is different. Now, federal tax has been reduced, but still high enough. So we're not going to worry about calculating federal income tax. I teach that in the tax class, but not in the accounting class. There are tables you can just look at, but here, the table you have in your book, if a person, now let's calculate, let's see if you can use a little common sense here. Now, first off, it said, assume that John made $14.62, all right, and claims one withholding allowance of $75. You take that $75 out, all right. Now I'm going to give you, and this is weekly. They've got them for bi-weekly and semi-monthly and annual and so forth, and monthly tables. But let's say a person made $1,500 in 1 week, and he's married filing jointly. So there's 2 exemptions. Now, can you find the taxes from this table? Take the $1,500, multiply 2 times 75, that's 150. You take 150 from 1,575, that leaves 1,350. Now you find 1,350 in this table, and it happens to be the same one. Now take this yellow line here and find the taxes on $1,350. See if you can find the tax. Read it sensible now and use some common sense. Has anybody ran into Marcus yet this semester? Anybody seen Marcus? Have you seen him? But now if he wants to do this online, he needs to change courses. But he's got one more day to miss, and I have to drop him from class. College rule is 3 days. Supposed to be 2 on Tuesday, Thursday. I'm gonna give him 3. So if he misses one more day, I'll have to drop him. I hate to do that. Okay, I may have to help you, okay? Look at this line. Your taxes is $99.65 on the first 767. You gotta subtract that 767 from 1350. What's that leave? 583? Is that correct? 767 from 1350. Does that leave 583?
Yes.
All right, now multiply that 583 times what rate? 25%. So what is 583 times 25%?
$145.75.
And you add that to the 99.65, and that's your taxes to be withheld. 144.65. Whoa, 200. All right, I didn't put the 75 cents, did I? The percentage method, okay? All right. Now here, if this person makes, okay, they showed you how to calculate just like we did. All right, our next tax is FICA, which is broken up into Medicare and Social Security. We talked about that a little bit the other day. I think, Amy, did you say your parents were drawing Social Security?
My mother does.
Your mother. And based on her, Amy's dad's working record, okay? A widow can do that, okay? But had your daddy still been living and he was 65 something, he could have drawn, and mother could have drawn too off of daddy, even if he was living. Those rates basically is 1.45% for Medicare and 6.2 for Social Security. But I think this book gives you flat rates, and we'll use what the book has. Now here's the flat rates this book gives you. They'll give you 6% Social Security and 1.5%. Those are not real rates, but we will use them in this chapter. Now, we've got 1462, we have to withhold Social Security and Medicare, and that's FICA tax of 109, plus you got federal income tax, plus you got state income tax. And you may have other deductions. We talked about some of these the other day. You know, we have a lot of fringe benefits here at Bluefield State. We got free parking. If I were working in New York City, I may have to pay $50 a day to park. Okay. Some of those parking buildings in New York City, they charge as high as $1,400 a month to park your car. And that's why not many people in New York City, they probably prefer not to own a car. They take the sub, or they walk or bike or whatever. It'd be expensive to pay that much for parking. All right. Have any of you been to New York City? Lisa, you didn't go during Christmas time, did you, or New Year's?
No, it's gonna be wrong.
How about you, Devon? What season did you go? With what? In Pennsylvania, and I took my grandson to. Did you see the Naked Cowboy? Either one of you see the Naked Cowboy? You did, Lisa. He's pretty popular around there. I think he does have something on, but he has a guitar in front. Did you see the tattooed lady? She's just out there nude with tattoos all over, I guess. But you can see anything in New York. But in Boston, I took him down Freedom Trail. We went into Paul Revere's house and over to Bunker Hill. And then we went up to Bar Harbor, park up there, Arcades or whatever it is. That park is as beautiful as Hawaii. And a lot of stops in that park. It was just interesting. And then from there, we came back. I took him to Hershey, Pennsylvania. And he got to make his own chocolate bar and stuff like that. But New York City, I thought about going up maybe a week. I want to ride Amtrak. Now Amtrak comes close to here. Where is it? Some little town? Where? Hinton. And I drove out there and looked at Amtrak. There's nowhere to park your vehicle if you get on Amtrak there or get off. I might have place for 2 or 3 vehicles. I don't know, but you're leaving them out nowhere. Hinton's out nowhere, isn't it? And the station is even not right in Hinton. It's close to it. But I do want to ride Amtrak to New York. I'll probably drive to Roanoke to get on Amtrak instead of Hinton. Anyhow, a lot of time we take things for granted. We take free parking for granted. Okay, now let's look at net pay. Gross earnings for the week. Take out federal income tax, take out Social Security, take out Medicare, take out retirement savings, and you're going to give a contribution to the United Fund. So this person's net pay is $1,072.70. Some places used to pay in cash, even places like Kmart. You can take it cash or at least cash your check, and some of these companies like for you to cash your check at their business, so you'll spend some of it before you go home, so forth. All right, so let's calculate some net pay. All right, we're going to calculate net pay. Now I'm going to give you somebody made $2,000 in a week, and the state income tax in West Virginia, we're going to say 6%. Not sales tax, state income tax. Federal income tax, I'm going to give you a flat rate of 10. Medicare tax, this book uses 1.5. And Social Security tax, this book uses 6. Now, let's say no other deductions, no United Funds, and no retirement. Calculate the net earnings, $2,000 a week, if you take out state, federal, Medicare, Social Security taxes. Everybody should participate. That means you. You should participate. You should have paper and pencil. You should have a calculator. You. I made the net pay. Okay, at least you got an answer? How much?
1530.
30? Everybody got 1530? Did you do the individual taxes? That's what you should have done. This is a fast answer though. How much is 10, 6, and 6 and 1.5? What do those taxes add up to?
23 and a half.
23 and a half. You could have multiplied the 2,000 times 76. Try multiplying 2,000 times 23 and a half, that'd be 76.5%. Does that give you 1530? That's just a shortcut. But you got to do them individually because you're going to have to make a journal entry. Now, what journal entry would I make here? I would debit payroll tax expense for the $2,000. I would credit state income tax payable, federal income tax payable, Medicare tax payable, Social Security tax payable. And then I would credit cash for the net of 1530. That's my journal entry. And there's a lot of current liabilities that this chapter is talking about. I would debit wage or salary expense for the 2,000. I would credit state income tax payable, federal income tax payable, Medicare tax payable, Social Security tax payable. Then I'd credit cash. Now, the employers has to match this FICA. They have to match Medicare and Social Security. And now the employer pays 4 taxes. He pays Medicare tax, Social Security tax, Federal Unemployment Tax Act, and State Unemployment Tax Act. That's the 4 taxes of the employer. Now, has anybody in here ever drawn unemployment? You didn't name it? State of West Virginia pays one of the best in unemployment per week. It's usually for 6 months. Sometimes it's extended to a year. If you lost your job before competition or outsourcing. Now these rates will be given also, but the state unemployment rate can be anything. SUTA can be any rate. A small company with a good rate is not laying off many people, may be 1%. Some companies may have to pay 5.4% or more unemployment tax. Now, if you were doing a manual accounting system, this is what it would have in it. I don't think anybody should have to do a manual payroll system. QuickBooks Pro has it in it, it's calculated for you. Okay? But if you were doing manual, you'd have to keep a payroll register. Well, it used to had to be done. Well, here's what a payroll register looks like. You got all the names of all employees, and you got the hours worked, you got regular and total. Then you got deduction for Social Security, Medicare, federal income tax, retirement, miscellaneous, United Fund. You got total deductions, so you got net pay, and that's $500 for salaries expense, sales. Over here is office salary expense. That's a payroll register. You'd use this bottom line to make your journal entry. You debit sales salary expense and office salary expense. You credit Social Security tax payable, Medicare tax payable, federal income tax payable, retirement savings payable, United Fund payable, and you credit cash for 8327.35. Now we want to look at those entries. That's the entry on the employer for the payroll taxes. All right, debit expenses, credit all the payables. Here we credit salaries payable. You could have credited cash if you were paying that day. But the salaries payable is the cash you pay out. Okay, that's still not the entry on employer. Now here's the entry on the employee. You only got two main entries in payroll. One is when you have the wage expense debit, and the other was when you have the payroll tax expense debit. Here are these four taxes: Social Security, 6%, Medicare, 1.5%. They'll give you the state unemployment and the federal unemployment rate. That's what I call SUTA and FUTA. And it is okay to abbreviate these taxes with an SS, MC, FUTA, and SUTA. It's okay to abbreviate in accounting for these taxes payable. Now here, subject to state and federal unemployment taxes at the federal rate. Here they're saying the federal rate is 0.6 and the state is 5.4. But that depends on the company and the state. Now this is one employee. One employee. This is total paychecks for the year. All right, one employee. Now here's what he has made, what has done the whole year. He made 100,500. Here was his net pay, 70,000, what have you. But anyway, that's for one employee. That's what you'll do is W-2 from. And now, when you get to making over 100,000, you have to be careful because the SS part stops at 100 and something thousand. The Medicare 1.5% goes on to millions. Now, the state and federal unemployment stops somewhere around $7,000. On your first $7,000, the company has to pay FUTA and SUTA, and after that, they don't. So I'm sure your problems will have that in it. W-2, which I've mentioned. Now those folks who are working, how many of you get a paycheck put in your hand? How many gets a paycheck put in your hand? Okay. Nobody has an electronic deposit? Now Bluefield State, I think all of us here. Now somebody that stood at work at Bluefield State, but just get a paycheck, right? With full-time employees, we have to have an electronic deposit. This goes into my bank account. It's convenience. You know, you don't have to worry about picking it up on a certain day. So, one guy when I worked at community college, everybody was on electronic transfer, but he liked to have that paycheck in his hand. He liked to cash his paycheck and keep out so much and give his wife the rest. So, that way if he had expenses on the side or a girlfriend on the side, he wanted some of the money. And electronic transfer, she could track that 2 weeks. Just a payroll statement, payroll checks. I think all payroll should be computerized. Computers make you work smarter, not harder. Same with a college degree. It will help you work smarter in your lifetime, not harder. Okay? There's nothing wrong with working for minimum wage. There's nothing wrong with working at McDonald's all your life, making a minimum wage, serving hamburgers. There's nothing wrong with it. Somebody has to do it. But is that your goal? Is that what you want to do? Is that your total achievement in life? Okay? All right, internal control, we definitely have to have that over payroll. Make sure people don't turn in too many hours. See, I know some of you go. Alicia wants to be a pharmacist. Andy wants to manage the largest nursing home in West Virginia. Devon wants to be a CPA. Have his own accounting firm. Okay? Brooke just wants to get married. Is that one of your goals, Brooke?
It's a goal, but not the only one.
Okay. Just kidding, Brooke. Okay. All right, so internal control. We've got to have internal control. I won't tag the rest of you just yet. All right. And of course, fringe benefits might be vacation pay, health insurance, the retirement, but we get medical benefits up here. I don't take it. I didn't mean it, already had it, the insurance and retirement benefits. Some fringe benefits. And like I said, parking can be a fringe benefit, but the employer don't have to put that on a payroll statement. Or using the gymnasium's a fringe benefit, or the pool would be a fringe benefit. A vacation pay expense, we have to set that up as a liability. But now some employers don't even do that. They just give you 2 weeks off with pay and it kind of is an ordinary payday. That's handled 2 different ways. Now, retirement, I wanted to pension expense debit and credit cash if the employer donates to that. And they do, 10% of the monthly salaries. Vacation and pension would be 2 journal entries in payroll. What does the word contingent mean? Contingent means me. Some liabilities may arise from past transactions only if certain events occur. These potential obligations are called contingent liabilities. The likelihood that the event creating the liability occurring is classified as probable, reasonable, or remote. Now, fire would be a contingent event for sure, but I guess they're talking about warranties here. Now here you have a product warranty expense and you got a product warranty payable. Have any of you all ever bought the extended warranty on a vehicle? If you buy a vehicle and the warranty's starting to run out, I get harassed by telemarketers to get their extended warranties. Everybody else get that?
Yeah, but my car never, when I bought my car, I never had a warranty on it to begin with because I didn't buy it new. But
Right.
they still harass me daily wanting about my car's
Yeah.
extended warranty.
Get a warranty on it.
When I traded in, they still call me.
Now I have found most extended warranties, you never get your money back. If you have to pay $2,000 or $3,000 or $4,000 for extended warranty, that'd take care of a pretty big repair bill. Now there are occasions whereas your repair bill may be humongous, but I never get extended warranties on anything. All right, product warranty payable, you may have to fix it, your credit supplies, you have to replace it. All right, those are contingent, you don't know if they're going to happen or not. There's three little ratios in this chapter. Working capital is your current liabilities minus your current assets. That's working capital. Now, if we take our current assets divided by our current liabilities, that's the current ratio. Our quick assets leaves out inventory and maybe some of the prepaids. But we'll look at those later. Right now I need to give you an assignment. Now I want you to continue with Cengage. Cengage. Continue with Cengage and try to have all the problems worked in this chapter by Thursday. Now I had thought about going in and putting a closing date. Now what if I put a closing date on chapter 11 for this Thursday? What day is Thursday? Next Tuesday. Sorry, Tuesday. I'm not going to do that to see how you do. If you try to get it done by next Tuesday, I won't have to go in and start putting closing dates on those assignments. But for class on Tuesday, chapter 11, let me give you a couple of problems for classwork. I'd like for you to do problem 1A, that's on notes. And problem 2A on payroll, taxes. Try problem 1A and 2A for Tuesday. And be working on Cengage. With that, I'm going to,
Hey,
yes,
before you, can you put that back on PowerPoint and let me finish copying down what you had written there? Before you exit it out, please.
put it back on PowerPoint.
On that last slide.
Wow, where did it go to?
I think so.
Got a long way to go, Amy. Where was it?
It was at the end.
They didn't bring it back up at the end. It brought it back up at
It
the
may
end.
not bring it back up.
What was it about,
The
Amy?
current liabilities, minus the current assets of working capital.
Oh, that. Oh, okay, that.
And
Okay.
then I didn't get what the other one said.
All right, I'll just give that to you here if I can. Just anywhere. The working capital is current assets minus current liabilities. That's WC. Now, WC in my language means working capital, not water closet and not Wayside Chapel. All right,
Okay.
and not wayward children. All right, the current ratio is current assets divided by current liabilities. Current ratio. Now there's a quick ratio, and that is your current assets over your current liabilities, but you take out inventory. I'll look at those with you Tuesday, Amy. Okay? Okay, with that, we're gonna call it a day.
Thank you.